Exercise 6. Fresno Company establishes a $300 petty cash fund on January 1st. On January 8th, the fund shows $197 in cash, along with the receipts for the following expenditures: postage $44, transportation in $12, delivery expenses $14, and miscellaneous expenses $33. Fresno uses the perpetual system in accounting for merchandise inventory. Prepare journal entries for the following. Letter A. Establish the fund on January 1st. The journal entry to establish a petty cash fund is a debit to petty cash and a credit to cash. The petty cash fund is debited whenever you increase the amount of the fund. When we establish the fund, we're increasing it from $0 to $300. At any point in time, the amount of the fund should equal the cash on hand plus the amount of receipts. Initially, when we establish the fund, we have $300 in cash and no receipts. By January 8th, however, we now have a mixture of cash and receipts. To reimburse the petty cash fund, first we need to calculate the amount of the reimbursement. Prior to the reimbursement, we have a $300 fund with $197 in cash and $103 in receipts, 44 plus 12 plus 14 plus 33. After the reimbursement, we want to return to a position where it's purely cash. We'll have $300 in cash and no receipts. The amount of the reimbursement, then, is the difference between the cash on hand, $197, and the amount of the fund, $300. It's a $103 reimbursement. We'll credit cash for $103. And after reimbursement, we won't have any receipts. We're going to reduce the amount of the receipts to $0. We'll prepare a journal entry based on those receipts, debiting postage expense for $44, debit merchandise inventory for $12, because remember, in the perpetual inventory system, incoming freight charge is debited to the inventory account. Debit delivery expense for $14 and miscellaneous expense for $33. Letter C. We're asked to prepare the journal entry to both reimburse the fund and increase it to $350. And they tell us to make two separate entries. The first entry simply reimburses the fund. We already did that journal entry. The second journal entry increases the amount of the fund. To increase the fund from $300 to $350, we debit petty cash and credit cash. This brings the balance in the petty cash T account up to $350. Notice that the petty cash account was not used to reimburse the fund only when we actually changed the amount of the fund.